Yeah, and what's interesting here too is like you're saying, prices actually of Bitcoin has moved higher. Obviously, alts have gone lower in general, but also the thing that I would kind of take note of is that it doesn't look like we're at the levels that we saw in 2019 and 2020 yet. We still have further downside to go as well. And the first thing that jumps out to me would be saying, okay, well, during those periods you had quantitative easing, right? So there was Federal Reserve printing money, interest rates were lower. We now have a scenario where we're still above that level, those bottoms, but we have liquidity being sucked out of the market. So in the very least, if it was just me, I would say likely that social index should get down to those lows, if not go a little bit lower than what we saw then because of the lack of liquidity.
Hello and welcome to Money Talks. In today's video, Gareth Soloway talks about how he expects the bull market will be. He also shares with us his predictions for Bitcoin, Ethereum, and Solana, and where's the best time to start buying more crypto. So without further ado, let's get started with the video.
Again, just from a pure technical standpoint, you see this trend line and then this one, which this one goes all the way back to February of this year, connecting through these highs. And look at what's happening to Matic right here, Polygon. It's beginning to break out. So again, and by the way, this doesn't mean like, oh, it's going back to $1 or $5. This is just a short-term breakout where upside to me maybe back to about 83 cents, which again, 13 cents higher on a 70-cent move. That's actually, what is that, about 20% move. So again, this just crossed my plate this morning and I'm like, okay, this does kind of tell me that the alts may, at least some of these alts that have really been beaten down, may be on the verge of getting a little reflex rally to the upside. And if we take a look at Cardano, let's just see what we got on that one, because that's kind of in the same path. This one, interestingly enough, is not doing that. So for me, this area right here would be the breakout, these highs. And short term, we haven't even gone up there. Matic, in comparison, would be trading up against this downsloping line or breaking above. So interestingly enough, Cardano is lagging Polygon versus Polygon's actually looking a lot stronger relative to some of the other altcoins. So yeah, interesting. Yeah, and just for those of you out there that are new to technical analysis, one of the reasons why this, or the main, just like you're mentioning, there's a 20 moving average there, but also when you look at price and it kind of comes down and it trades sideways, the reason why that creates resistance when you're below and you're coming back above is because to go sideways in a chart, there's a lot of buyers and sellers that are meeting, right? They're kind of, buyers are selling, and then, or buyers are buying, sellers are selling, and that's why price doesn't go up or down. It kind of just goes sideways. But you get a whole new group of buyers there, right? So think about, let's say I was there, and I'm not, but let's say I was one of the buyers and I was at 85 cents. Well, all of a sudden it broke down. I thought it was going to go this way. And again, I'm speaking from the perspective of being a retail trader. And instead it dumped out to 50 cents. I found myself down on this trade, hypothetically down 30-40%, right? And so the thought process is when I get made whole, when I get back to break even, I was sweating when it was down there. Oh my goodness, the SEC is going to, crush all these things. I get back to break even. There's a psychological want for me to say, okay, I'm back to break even. My account is back to where it was. Cut it. Just get out. Just say, be thankful. And that's why these turn out to be pivot points on the chart where there's resistance on the way back up. You get all these buyers that were buying in here and then thinking it was breaking out. They're all now selling and saying, all right, thank goodness I got out without being crushed too much.
The upcoming Bitcoin halving is set to blow fresh wind in the sales of Bitcoin-focused stocks such as Michael Saylor founded tech firm MicroStrategy. In a research note shared with Cointelegraph, New York-based investment firm Berenberg Capital Markets explained its reasons for a bullish outlook on MicroStrategy MSTR, which Berenberg has given a $430 price target. According to the analysts, MicroStrategy derives the bulk of its value from the 152,333 Bitcoin it held on its books as of June 28, adding that a Bitcoin halving rally could see its shares gain significantly in price. It is our expectation that the price of Bitcoin will repeat its historical pattern of rallying both ahead of and following each Bitcoin halving. The Bitcoin halving, which is scheduled for April 26, 2024, reduces the BTC issuance rate by 50%, significantly dampening the velocity at which new Bitcoin enters the crypto market. As Berenberg highlights, previous halving cycles have seen the price of Bitcoin surge by a minimum of 682%. At the time of the first Bitcoin halving on November 28, 2012, the price of Bitcoin hovered around $12. 367 days later, its price peaked at $1,164. The analysts noted that while Bitcoin's supply treads a predetermined path, the overall demand for Bitcoin needs to be gauged before anyone could predict the potential magnitude of future rally. To measure this, the researchers looked to the recent surge in spot Bitcoin ETF applications from some of the world's largest and highest profile asset managers as proof that institutional adoption of Bitcoin is on the rise. The investor note also drew attention to the pro-Bitcoin remarks made by BlackRock CEO Larry Fink on July 5, where he sounded like a high-conviction Bitcoin maximalist.
The alts at some point we'll be able to figure out their valuations once we get clarity from the SEC, right? And so the SEC will say, okay, these are the rules. And then all of a sudden, big money will be able to start valuing these things. And so whether, the market caps on a Matic should be 5 billion or 25 billion or maybe 50 billion, we don't know yet because, again, we don't know what the real valuations are. But that will become clear. And my guess is at that point, that's where the value really starts to. And by the way, that's actually a good thing. Like investors need to understand that any sort of additional information that these coins can give us makes the clarity and the transparency much better, which allows us, even as retail investors, to say, okay, I think I should pay here for this versus where it was before. And I think that's important for us. I was looking at the Bitcoin dominance chart, and with Matic starting to inch up, you actually have a very short, and again, this is very short term because I think you and I both agree we're headed towards 57 to 59% dominance. But this is a little bit of a bearish pattern, and interesting to see the alts beginning to show a little sign of life. What I would be almost expecting is some sort of secondary short-term move. And again, mind you, short-term move, but a short-term pullback maybe right around 50% before that next leg up. And this is what we would refer to, again, a sharp candle down with a little inside bar consolidation that might be telling us that. So that's another signal from a TA, just strictly short-term technical analysis, that maybe the alts are waking up. And then it brings, and again, I'll let you comment in just a minute on the dominance, but I do want to just bring up the Solana move has been really impressive. And that's another alt, right? Where Solana just in the last, really just since June, mid-June, so we're talking less than a month or right about a month, is up 50% off of its lows, which is very, very impressive. Yeah, I think that's what's so cool about the dominance chart or any of these charts is that generally they still abide by the technicals of what an Apple chart will do or anything. And I think that's always been the big question for people, at least when they come to me. They're like, well, you've always traded stocks. What makes this work on cryptocurrencies, or what makes it work on commodities, or what makes it work on dominance? And the beautiful thing about it is that technical analysis isn't about the specific asset. It's about the people that are trading the asset. And if you go back to I don't know if you know much about the tulip mania in the 1500s, Ben, but I mean, the same greed that drove, people literally were buying homes for one bulb of tulips, like one tulip. That's how crazy it got, which again, that greed is the same greed that helped the dot-com bubble create, the housing bubble in 2007 leading to 2008, the crypto bubble where we saw shit coins and everything go up like crazy. It's the same thing. And so when you're charting things, as long as you have human participants, now you can get into AI and what happens then, who knows, but human participants, it should behave the same way.
So what's your price prediction for Bitcoin at the end of 2023? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.